Today, we're going to introduce you to a concept which we call recurring disability. This is a situation basically where you were told disabled, and once again, let's say you were making $3,000 a month. So when you were told disabled, we started sending you a check for $3,000 after the waiting period and so on and so forth, okay? But along the way, you're feeling better, everything's wonderful, the whole bit, you feel, it's time for me to go back to work and everything. So in other words, I return back to work. And so if it returns to work, then basically that $3,000 will stop. Okay, so that's essentially it. So therefore, no more benefit from that point along. Okay. However, if within 6 months of going back to work, you have recurring that disability, in other words, it's the same disability, or it is related to that same disability. So, for example, you have a back injury, let's say, so you're told disabled, we start sending you a check for $3,000. Now you go back to work, and you find that after a month, 2 months, whatever, of going back to work, your back is still acting up, or perhaps you may feel a tingling, for example, in your hands, or some other illness which is related to that back injury. So it doesn't have to be the exact same injury, but it could be related to that particular injury. Then the fact that you've gone back to work within that 6 months, we will start once again to give you that $3,000. Okay, so the whole thing starts all over again. And this basically, the most important part of that recurring disability is that because you did go back to work, back on disability within 6 months, because of the same, the same or related injury and everything else, you do not have to worry about that waiting period again. In other words, the idea of recurrent disability is that it avoids 2 waiting periods. So once again, just because you went back on disability, the 90-day waiting period that you originally had, for example, that doesn't start again. Okay, basically we waive that. So the beauty of recurrent disability is that if you go back to work within 6 months, the original waiting period is already taken into consideration. There is no new waiting period. So it avoids the two waiting periods. Now, again, be careful of these things because everything is added together so that if you only have, let's say, a 24-month benefit period, you're still only covered for 24 months. In other words, this doesn't get extended or anything. It's still only a 24-month benefit. So sometimes you might find that the benefits cut off a little bit sooner rather than later. But it's simply because they do merge the two disabilities together and consider it one disability. After 6 months, of course, the issue is it's a brand new. So even if it's the same one, so you still have a back issue, but you went back after the 6 months are up, it will be considered a brand new disability. And therefore, once again, you're subject to the waiting period, all the things that, so really what we're doing is we're starting all over again, basically. So the recurrent disability is a very, very nice rider to have in that you can, in fact, is, you might say, the insurance company will encourage you to go back to work, try it out. And, if it doesn't work out in the next 6 months or so, don't worry, because you can always come back on disability, and we're not going to penalize you by giving you another waiting period. So that's essentially what that's all about. Now, at the end of the day, the insurance company, of course, does have the right to deny a claim. Now, nobody obviously likes the idea of having a claim denied or anything, but there are 3 big ones that usually could cause a claim to actually be denied, besides the usual misrepresentation, fraud, things of that nature there, okay? But so the 3 ones that you have to look at is that the first one is what we call absence of loss. You have to give us proof that in actual fact you have lost something. Remember that in the insurance industry, we are in the business of insuring what we call absolute losses, not speculative losses, so absolute losses. So there has to be an absolute loss. So for example, when I insured you, the original application, you had to be full-time employed. If you were not employed, if you lost your job, and now you apply for disability insurance, you can't get it. The insurance company will not issue any policy. Why? Because 60% of nothing is still nothing, basically. So if you're unemployed, you cannot buy disability insurance. But let's assume for a moment that when I did see you, you did have a job and you did qualify for $3,000 a month, all those sort of things there. Now, a few months later, a year later, whatever it is, you lost your job. You lost your job, so now you have no employment. And at the same time, to make matters worse, you became disabled. So you put in your claim And the insurance company says, well, where's the loss? You're unemployed. There is no loss. And so therefore, you get nothing. Okay, so there is no provision here that if there is no loss, then there is no claim, basically. So what we're saying is you have to be full-time employed at the time of application, and you have to be full-time employed, basically, at the time of disability. Otherwise, we cannot insure something that simply doesn't exist. Okay, so there's no loss. The second thing is, let's assume there is a loss. Okay, so it's fine. The next thing the insurance company says is if there's an absence of proof. And by that, we're saying is we want proof that you, in actual fact, are disabled. Now, this proof has to come from your medical doctor, not from a paramedic, not from a nurse, not by you, okay? You have to be under the supervision of a medical practitioner. So your family doctor, the doctor at the hospital, whatever it is, it has to be an MD, basically, a medical doctor. So nurses, paramedics, things of that nature, they don't work. So you have to be under supervision of a medical doctor all along the way. So therefore, they will continually monitor this and continue send for more reports, let's say, from your doctor saying, yes, this person is still disabled, so on and so forth, okay? And so therefore, you are under, you might say, medical care and everything else. Then we will continue to pay you for that benefit period, whatever that is, okay? But if you don't have any kind of proof, then there'll be, no claim. The second part of all this, the third part rather, is delay. We strongly recommend the moment you become disabled, put in your claim. Even if you have a 6-month waiting period, doesn't matter, okay, put in your claim. In other words, you should put your claim in within 30 days of the incident actually happening. So even though you may have a 90-day waiting, a 6-month waiting, whatever the case may be, you put your claim in right away. Okay, so that way a file is opened and so on and so forth. And within 90 days, the insurance company wants to have all the material in order for them to adjudicate. So, for example, we need to have the proof, in other words, from your doctor. We need to have everything. So basically the claim form, you might say, has to be filled out properly by your doctor. So we want to have all of these things here within 90 days. So moral of the story basically is that within 30 days, put in your claim right away. Don't delay it, regardless of your waiting period. Also, make sure that your doctor or whoever is taking care of you fills out all the claim forms and everything else within that 90 days. So that way, the claims could be adjudicated. Now, once again, there are going to be some circumstances, for example, where beyond your control, you were not able to get these within that 90 days. So you were injured, let's say, overseas, and by the time they got you back here, back into Canada, whatever, all that kind of. So there are some mitigating circumstances that could happen. You could be in a coma, so there are some issues, basically, where as long as the insurance company is notified of these things here, and proof is given that you couldn't have possibly have put in the claim within the time frame that we requested, they will consider those things as well. But generally speaking, after a year, that's going to be a little tougher to, so in other words, within 365 days, we want to have this thing rectified one way or the other. Okay, so this is again a very, very excellent type of riders, you might say, or options that insurance companies give you, that recurring disability and that denial of claim. Once again, read the contract to make sure that all these things are in there so you fully understand and explain those to your clients as well. And we'll see you next time.